Coming to you guys with my live stream tonight from cardio. That's right, this is how I fit it in. So I wanted to give you guys a real quick conversation tonight, again on the topic of investing. Let me scoot my chair up a little bit for you guys. All right, let me know if you guys can't hear anything. I'm on the Instagram, on the cardio. I wanna make sure the volume's good. So I wanted to talk to you really quick about investing and really, again, studying the trends and the tracks of the top 1%, what they historically do. So as you guys know, I'm not a fan of the market. That's not where I invest my money. And there's a lot of reasons behind that. And someday that might change, but I'm gonna share with you what I've learned and why I stay out of the stock market entirely at this point in the game. So again, most of my investing, it comes from studying statistically and historically what the top 1% of wealth have done, and then modeling that with my own finances and teaching that as it works for me as well. So when you study the top 1% and where they invest, the number one thing they invest in is actually small business equity. So it's not stocks, it's not retirement funds, it's not home equity, it's not savings accounts, it's not all of the stuff that most people invest in. 65% of their overall asset value statistically goes into small business equity. Now, the question I want to pose tonight is, do these people invest in the stock market? Okay, is that where they put their assets? No, the answer is yes. That's the short answer. The long answer is this: the way that the wealthy invest in the stock market is different than the way you and I would. Okay, so when I say stock market, you probably think mutual funds, 401ks, TSP, Vanguard, all of the places you guys put typically money in the stock market, or where the average person would put money in the stock market. And that's great and everything, but here's the deal. Those aren't where the wealthy invest. When you think wealth, I want you to think, for example, of Warren Buffett. Okay, so that's a guy who builds gigantic amounts of wealth, and he does use the stock market. Now, if you look at Warren Buffett as an example, he's not investing in index funds. He's not buying S&P index funds. He's not putting his money in 401ks. He's studying companies, and then he's buying ownership in those companies. So he understands their books, he understands their profits and losses, he understands their business strategy, he understands their industry, he understands the economics in relation to their industry and the trends that are coming up. And then he makes the decision based on all of that data before he puts money in the market. Okay, now you guys have probably heard my boy Warren say you should invest in S&P index funds. Here's the deal. When the consumer buys an investment product, and I want you to really listen to closely to how I said that. When a consumer buys an investment product, they're causing what's called market displacement. So if you guys have ever seen like a cup of water or even a pool, let's say a pool where a bunch of people get in the pool and the water rises, that's what happens in the stock market. So when a billionaire tells the entire population you should put your money in the market, he's trying to cause displacement. He's trying to cause the entire market to come up so that there's more capital for him to take. That's how that works. Now, what he's doing is, it's called market making. He's getting people in the market, he's getting them to cause the market to rise, and then he's gonna do his stuff, sell at a gain, take your money, and make a profit on it. Simply put, that's how it works. So, do the wealthy invest in the market? The answer is yes, but they don't do it the way that you and I are advertised to. I would even go as far to say that the Vanguards and the Fidelities and the 401k funds and the mutual funds aren't even investments. Those are products. Those are products that are created by a board of directors that work for a corporation that's trying to get money from the consumer into the corporation. Very different. It's actually, like, it's not even, in my opinion, a real investment. It's a product. It's a purchase. You're not investing at that point. So if you're trying to invest in the market, here's what you need to do. You need to get wealthy first. You need to get enough money where you're not going to get hurt playing that game. Because if you go in there with your $100 a month or your $250 a month, like, you're a tadpole in the sea. There's much bigger fish out there. Like, there's stuff happening in the market that you guys aren't even aware of, that if you knew about, you would be so concerned you would never want to get into it. Okay, things like high frequency trading, market making, like all of this stuff that goes on behind the scenes that never gets talked about, but it happens every single day. So if you're right now starting out, I would say don't even think about investing yet. Think about increasing your income to the degree that you can save 40% of your gross. That's what you need to be focused on. Now, once you've done that, then you can start looking at investing, and you need to follow the number one rule of investing, which is don't lose money. So that means you're not putting it in the market, you're putting it into sure things that are gonna pay you either cash flow over time or appreciation over time, no matter what. Very low risk, very high return, or very sure return, right? So that's what you need to be looking at. So real quick, guys, I'm gonna go ahead and post a link in the comments. If you would like to learn more about what I talked about tonight, you can go to my site here. And this entire series that I've been doing, it's based on how do you go faster with your finances? How do you build wealth faster? Okay, not the average plan, not the plan everyone else is doing. How do you speed this thing up? And it's these little tiny edges and advantage, pieces of knowledge and information that most people don't do. They're not complicated, they're very simple, but the average person doesn't do them, and it causes them to go slower than they need to. So check that link out in the comments so that you can kind of get an idea and a gauge on where you're at in relation to where you need to be. And from there, my team can set up a call with you and we can answer all your questions and help you build out a strategy, okay? I'm gonna sign out here, guys. Make sure that you do like, share, and subscribe. Again, check that link out in the comments. I'll talk to y'all soon.